So, as part of their 25 markets by 2025 plan, the innovative Chinese electric vehicle company known as NIO will be entering as many as 12 different international markets by next year, all being outside of China. And in today's video, we're going to quickly talk about what those markets are, what countries they are, what it means for their business, and I'll also give you a quick update on the stock and talk about whether I'll be buying it myself anytime soon. So, should be a fun little update video on NIO. I hope you guys enjoy it, but let's get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Let's go ahead and start by taking a look at what those markets are, and then I'll give some quick updates on the company and the stock as well. Okay, now as it stands, NIO has already expanded internationally into its first European market with Norway as of September of last year, but only really started delivering vehicles there earlier this year. Now, that started with their higher priced ES8 SUV that competes with something like the Tesla Model X. Then they'll be releasing their premium sedan called the ET7 later this year, which should compete more directly with something like the Model S. And then by next year, they're aiming to release the ET5, which will be a smaller and cheaper version to compete more closely with the Tesla Model 3. Now, they're also building out their battery swap and charging service infrastructure throughout Norway as we speak, and they've even partnered with Shell to help them build more of them, while also giving NIO customers access to already existing Shell charging stations as well. On top of all of that, they've already launched their battery as a service feature in the country, which lowers the initial price of their vehicles by leasing out the battery instead for a monthly fee that I believe includes battery swap and other services too. And while they've barely started to ship their EVs into the country, only delivering about 500 of them so far and not even making the June sales record for the top 20 EV models in the country, which is largely dominated by Tesla. But I still think that launching first in Norway was the right decision, given that the country is very small, but also very warm and well receiving to electric vehicles. As it stands, Norway is only ranked 119th by population, but after seeing their EV sales overtake gas vehicles over the past couple years, Norway has actually become the #1 ranked country in the entire world by EV adoption per capita at 81. For comparison, the US is only at 5 and China is only at 3. Of course, those are much larger markets, but the point is how well received electric vehicles are by the Nordic population. Plus, the main reason why NIO has been selling so few vehicles lately is something that I really think is not even their fault. This is a brand new market that NIO has to literally ship their vehicles into from China, but because of the pandemic related disruptions to supply chains, they've had to literally halt their production multiple times, which is something that is even affecting Tesla and their production in China as well, which you might have even noticed that's why the Model 3 is not on Norway's best-selling list, because they were being shipped from China and Tesla was having those disruptions. But moving forward, NIO has been doing a great job of recovering, with overall sales rising a little in May as they slowly restarted production, and then they set an all-time record high in June once things were ramped up again. And in Norway specifically, deliveries have been increasing every quarter, jumping from 29 up to 169 and up to 245 last quarter. This quarter should be another large increase as well, given that production is ramping up again. Meanwhile, NIO also plans to enter Germany, Netherlands, Sweden, and Denmark all by the end of this year, which is a pretty big deal considering that 3 of those 4 are in the top 10 for EV adoption. Plus, they're very large overall EV markets too, with Germany ranking second only behind China and ahead of even the United States, Norway ranking 6th, Sweden ranking 7th, and Netherlands ranking 8th. But it doesn't even stop there. On their website, electricvehicles.com put together a list of details, job postings, construction plans, and more to show that NIO is also planning to further expand into Europe through Austria, Belgium, France, Hungary, Italy, Spain, and Switzerland, all by sometime next year depending on the country. Reason why all of this matters so much is because Europe will be a huge growth driver, growth engine for NIO. It's quickly seeing the most EV adoption, with the top 7 countries in the world per capita all being European. And Europe as a whole is only slightly behind China in terms of overall EV size and more than 3 times larger than the United States market as well. Speaking of the United States though, NIO also seems to be planning an expansion there very soon too, as they just signed a 10-year lease on a headquarters that is more than double the size of their previous footprint, while also posting multiple job searches online to help with expansion plans specifically for the Americas. So if we get to a point within a couple years where NIO is selling their vehicles in their home base of China, which is the largest EV market in the world, and then they're also in Europe, which is the second largest as a whole, and then they're also competing in the United States, which is the third largest, I mean, that's a huge positive for them. But does that make the stock a buy? Well, I think personally the fact that they're a sort of Chinese version of something like Tesla is a little bit of a double-edged sword, because having the backing of China and expanding so much internationally can definitely provide a ton of growth for them. But at the same time, there are a lot of risk factors involved in not just being a Chinese stock, which can be very problematic these days, but also just within the company itself. So let's talk about some of the concerns I have, and I'll give a quick overall update and my thoughts on the stock trading at today's current levels. Well, when looking at the stock, it's certainly been a very volatile ride over the years, trading for as little as just $1 to as much as $65 before crashing all the way back down by almost 70% to just around 20 today. At these levels though, the valuation is actually getting pretty attractive, considering that their price to sales ratio has now fallen from over 22 just a little over a year ago all the way down to just around 5 today. That's pretty good considering how quickly it can come down further as long as they're able to put up some decent growth rates, which is exactly what NIO has been doing in recent years. You're talking revenue growth of 58% in 2019, over 100% in 2020, over 120% in 2021, and still 68% and 75% expected in each of the next 2 years respectively as well. However, on the flip side, you've probably noticed that we're using a price to sales ratio to value them, which is due to the fact that they are not profitable. They really have never been profitable on the bottom line, on the net income, and they continue to lose billions of Chinese yuan every single year of net income. I guess my counter argument to that though would be that you can't really expect a local Chinese startup to create innovation at least somewhat comparable to the likes of a giant like Tesla, who's been doing it for years, and then try to expand internationally to a huge amount of countries around the world and yet somehow still be profitable this early on. That type of R&D and expansion that they've been doing, that takes huge amounts of money, and yet when you look deeper into NIO, you actually find that they do a pretty good job of improving their margins over time. For example, when you look at gross profit, it's improved from negative 1 billion yuan in 2019 to positive 2 billion in 2020 and almost 7 billion last year. Even their vehicle margins usually hover around 20% or more. For context, Tesla usually hovers at around 30%, which is much higher than most other car makers, and even Ford is much lower than both of them at less than 6% last quarter. So when I look at all of this and I try to judge NIO as a company and a stock, I definitely think that they're making all the right moves. I really like how they're improving their business over time. They're competing more heavily in a very high growth electric vehicle market, and they're doing a great job of expanding not just in the Chinese local scene but internationally as well, which I think is very impressive. However, I still have to classify NIO stock as a high risk, highly speculative stock for the simple fact that they are not profitable, they are still very young, and they are a Chinese stock as well, which has its own issues. This isn't really a safe investment in the classic sense of the word, like something like Microsoft or Apple or Google, who already dominate their respective markets and have a proven track record of success, which makes them easier to predict where they might be heading in the future. NIO, on the other hand, is still very small, very young, and they are really trying to claw their way into a massive, highly competitive automotive market that not only contains already giant innovative competition from the likes of Tesla, but also Chinese rivals like XPeng and BYD Motors, who are doing very similar things to what NIO is doing. And on top of all of that, you still have the legacy ICE players who will eventually transition or are slowly transitioning right now over to electrification, like Ford and GM and Mercedes and Toyota and Honda and many others. And I don't think those companies are just going to let their market share be stolen so easily. I think they will try to fight back and release a lot of EVs, and they definitely have the capital and the massive size in order to do that, to flood the market with a lot more EVs and a lot more competition for companies like NIO. But I still think that the EV market will be massively large enough to support multiple players in the space. I think NIO is incredibly innovative with a lot of technology and features and performance that is at least somewhat comparable to Tesla, which I think is very impressive. And they're making all the right moves, and they're expanding internationally. And as a high risk speculative stock, I still think that NIO is one of the best options out there. If that's something that you're looking for, you just have to know the risk that you're taking with a stock like this. Now, for me personally, I just own way too many spec stocks as it is, including 3 other Chinese stocks. So I'm not really in the market looking for a Chinese speculative stock. I actually just picked up another spec stock the other day. It's the video right before this one that I posted, or maybe 2 videos ago that I posted, where I picked up Pubmatic, which is a stock that I like more. And on top of all of that, I also own Tesla, who is my second largest investment in my entire portfolio. And that gives me a lot of exposure to the electric vehicle market as well. So I just don't really feel like I need to be buying NIO stock for my personal portfolio. But if it continues to crash like it is, and it gets down into maybe the mid to low single digits again, this is a stock that I may have to pick up, take a chance on again, because I do like the moves that they're making, and I think they are making a lot of progress. Again, as a spec stock, knowing the risk, I think it is pretty darn attractive if that's something that you're looking for. But anyway, those are my thoughts. I'm going to be holding off for a bit longer, but let me know what you guys think down below. Do you own NIO stock? Do you like it? Do you hate it? Do you think it's too high? Do you think it's all hype? Do you think there's real opportunity there? I'd love to hear your thoughts. Leave them down below and I'll try to respond to as many comments as I can. But thank you so much for watching. I hope you enjoyed the video. Hit the like button if you did. And I will catch you in the next one. Take care. Bye-bye.